Welcome to the Unfolding the Stock Market Crash. My name is Phil Grande. Okay, your host, philstake.com. Please, during this video, please hit subscribe, like, and share. I would really appreciate it if you do that, okay? All right, let's get started. Now, you know every week I add to my little list of why the market's going to crash. This is the divergent list. Here's the stock market going up right here. And this is the divergence that's going to pull it down and make it crash. Well, let's talk about the biggest thing that's happening right now. They're talking about raising rates, okay? That's insane. Why? Because what's going on, remember, if you go back and you take a look at our history of how we got to QE, it was right here. It was our QE1, QE2. Remember when we crashed here in 2008, right here? We crashed in 2008. Let me get this here for you. Okay, when we crashed in 2008, the market went down. Remember, we did our first QE. They printed $1 trillion and bought 10-year treasury yields to drop them down to zero so that institutions would borrow the money free and buy tech stocks. Because remember, tech stocks do well when yields are low. They did it the same here in November 2010. They did the same in 2011. Well, they discovered something. They said, well, isn't this interesting? We have no earnings, but the stock market goes up. All we have to do is to hell with earnings. We don't need profits or earnings. We just got to keep doing QE. Keep interest rates down to zero. The institutions come and buy their own stock, and the market will keep going up. In fact, what's really interesting and what we found out was this. Let me show you. Right here. If you go back to the last quarter of 2018, this quarter recorded the highest earnings ever reported. The highest earnings ever reported. But the market went down. So we had the highest earnings and the market went down. And then from 2019 throughout the year, we had the worst earnings, but the market went up about 20%. But the earnings were going down. So here, think about what happened. They're discovering earnings are going up and the market's going down. Earnings are going down and the market's going up. So when we had this crash right here, February 2020, that was going to happen regardless of COVID because, again, inflation was too high. Our earnings were terrible. And they decided, okay, when this crashed, to continue. Do not do a recovery. Do not do a recession. Let's keep doing the same thing we did since 2008. Print crazy and just keep moving the stock market up. But something happened. Inflation got out of control. Gasoline, food. So now people are in trouble. And so if they continue to keep rates at zero and inflation keeps on going up and up and up, people will be in a position worse than they were in 2008 when they decided, hey, I got to pay my credit card. I can't pay both my credit card and house payment, so I'll just pay my credit card. They'll be in a position they can't pay their house payment and they can't pay their credit card. So this last run, we're finding now that we have big insiders. They are dumping like never before. If you go and you take a look at the insiders, Bezos, Amazon, Tesla's Musk, Nadella, Microsoft, they're selling 4 times more shares now than they ever did before, especially in 2019. We're also finding that Nadella, she sold half of her stock, $285 million worth. We also finding out that Aaron of AMC Theaters just dumped $25 million. His 625,000 shares just dumped it. We can go on and on with CEOs dumping left and right. Now they'll come back and we're being lied to by the jibber jabbers telling us, well, it's just a normal pre-scheduled selling plan of their 10B5-1. It's a bunch of lies, okay? You don't have the Waltons selling a historic $6.8 billion, or Zuckerberg $4.47 billion, or all these insiders. Doesn't work like that. It doesn't work like that. I took 2 private companies, brought them public, and you try to create wealth and you try to pass it on to your kids, that generation, then you want them to pass on to the next generation. You just don't dump. You dump because you know that if they move this market up, if interest rates go up, it's going to take this market straight down. Now, but remember, we could be at a point where that's what they want. And they're going to make money on the way down, the 1% and the 100%, as we will, because we short. The poor people who don't know how to short are going to get screwed because there's no way to slow the market up. There's no way they can slow the crash because we have no rates. Remember, 2000, the dot-com crash, the housing crash, we slowed it up because we had, guess what? We had rates that we could cut. So every time it was the market, it didn't go straight down. You know, went down, then went back up, went down, went back up, like putting brakes on. This one's just going to go, in 2 days we could go down 75%. So they may be very scared of that, and they may decide, you know what, let's not. Remember, between 2015 and 2017, they were going to raise rates, and they chickened out. They decided not to, remember? They decided not to raise rates. And so they could decide the same thing, but this time it's different because this time, because of all that inflation, what are they going to move gas prices now up to what, $10? No, see, it doesn't work because over the last 13 years, keeping interest rates too low for too long have hurt the consumer. Inflation's too high; they're getting killed. So they're worried if they raise rates at a point where now they won't be able to pay their. See, at least now they got a choice. They can say, well, I can pay my house payment, but I just won't pay my credit card. I mean, I'll pay my credit card, but I won't pay my house payment. Exact same thing they did in the housing crash, right? What may happen is this time, and they know, if they decide to keep playing this game of zero rates, that now they can't pay their credit card and they can't pay their house payment, and then you're going to have a real problem. So that's the situation. We've never been in this kind of a mess here. Now, please, I want to show you one thing before I leave. And they will know their decision December 15th. Please do not listen to the fake Business News Network where they're telling you, okay, they're telling you to buy on pullbacks. You see how they're buying the stock on pullback? This is Norwegian Cruise Line. See how in the last 3 days they've been buying it? But the problem is the trend is going down, meaning the money flow is going out. You never buy when the money flow is going out because what happened, they'll go up 2 or 3 days, unless you want to day trade it. Then that's fine. You use these 2 charts. But if you're a longer-term investor and you start buying these stocks and they're going up 2-3 days, they'll drop right back down because the trend of money's out. What you want to do is you only buy on pullbacks when you have stocks that are strong. Okay, give you an example. If you take PHM. You see this pullback right here? You buy in the pullback because the money flow is going up, not out. That's what you buy in the pullback, and that's what we've been doing. We've been buying stocks with this kind of pattern. So if you want to learn how to do this and learn how to short, please join my gang free for 10 days. So there we are. Big decision for the Fed. For the Fed. On December 14th and 15th. Are they going to raise rates? Or have they decided, you know what, let's just pop the crash. Let's just pop the bubble like they did 2008 and they did in 2000. Let's just pop the bubble and we'll make money on the way down and we'll create another bubble on the way up. That's the decision they got to make. If you know how to short, it makes no difference to us. We'll make money either way. It's the poor folks that don't know how to short. They're going to get killed. So please, if you don't know how to short, join my gang for 10 days free and learn, okay? All right. I'll see you on the charts. That's where we are. Everything's in the hands of the Fed. See you on the charts.